Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump threatens to fire a top official at the Federal Reserve, escalating a pressure campaign. Welcome to the Friday edition of the fastest show in politics. This is Balance of Power on Bloomberg Television and Radio. I'm Tyler Kendall here in Washington alongside Bloomberg's Michael Shepard. Joe Matthew is off, and all eyes are on the Federal Reserve today. The White House ramping up attacks against Fed Governor Lisa Cook over allegations of mortgage fraud. But our focus was already on the central bank today as Fed Chair Powell gave his highly anticipated remarks at the annual economic symposium out in Jackson Hole, Wyoming. We'll bring you a live report from there. Our very own Bloomberg's McKee is on the ground, and we'll also have a conversation with Lael, Brainard, the former director of the National Economic Council. She joins us here in our studio in just moments as Michael Shepard, traders are really adding to their bets ahead of the next FOMC decision. Well,
they really are, and this has been one of the strongest days for markets in the past several months off of this news on the Fed. But there's other news that they've had to digest as well, Tyler. And we saw that Canada has decided to pull back on some of its retaliatory tariffs against the U.S. over some import levies that the governor there in Ottawa had found objectionable. Canada was one of the few countries that actually moved to retaliate against some of these Trump tariffs. And so we'll be looking to see more of the choreography between Prime Minister Mark Carney and, of course, President Donald Trump in coming days. And naturally, we're also going to want to get from Wall Street a sense of how they are digesting both the news from Canada and from Jackson Hole. We will go to Bloomberg's Charlie Pellet, the voice of Bloomberg Radio and the New York City subway for the numbers.
Hi, thank you very much, Michael Shepard. Here's what's going on. Stocks very close to session highs. All about Jackson Hole. We'll take you there live in just a moment with our Michael McKee. But the Dow, the S&P, NASDAQ, all advancing after Powell's remarks. You saw him on Bloomberg Television. You heard him on Bloomberg Radio. S&P right now up 93 at 64.64. That is a gain of 1.5%. Dow Industrials up 901. That's an advance of 2%. NASDAQ up 353, up 1.7%. Our Mag 7 index up 1.9%. Cannot ignore the Russell 2000 index. Big move there, up 3.8%. Dow Transport's taking part in the rally, surging 3.4%. Your 10-year at 4.25%, with the 2-year currently yielding 3.68%. Spot gold now up 1%, 33.72 the ounce. West Texas Intermediate crude a little changed, up 7 cents a barrel, 63.59. That's a gain of 0.1%. Bitcoin now surging by almost $4,000 a token, up 3.5%. Bitcoin at 116,398. As we have been reporting and as we continue to cover, President Trump says he will fire Lisa Cook from the Fed's Board of Governors if she does not resign her post over mortgage fraud accusations from a top ally. And NVIDIA has instructed component suppliers, including Samsung Electronics and Amkor Technology, to stop production relating to the H20 AI chip. This according to the information citing sources. NVIDIA shares today, they are advancing up by 1.3%. NVIDIA, very much a market focus next week when it reports earnings. Recapping stocks higher, S&P up 1.5%. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Michael Shepard and Tyler Kendall.
All right, Charlie Pellet in World Headquarters for us in New York. Thanks so much. And today we're tracking our top story. Federal Reserve Chair Jerome Powell carefully opening the door to an interest rate cut come September. He gave what will be his last speech as chair to the Kansas City Fed's annual economic symposium earlier this morning out in Jackson Hole, Wyoming. And Powell pointed to rising risks for the labor market, even as concerns over inflation remain.
The stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
There was a lot hanging over these remarks, from the path of rate cuts to heightened pressure on the central bank from the White House. And we want to get into all of it with our very own Bloomberg's Michael McKee. He's out there in Jackson Hole, has been covering this all week for us. He's our international economics and policy correspondent. Mike, let's just start with a recap from what we heard from the Fed chair. What sort of signals did we get out of him today?
Well, basically by saying that the Fed it's okay to adjust policy, he told the markets that they are betting correctly. The Fed is on track to cut rates in September. That's a bit of a surprise. The feeling was he would keep his options more open, but for some reason, the Fed has decided that the threat of unemployment rising and people losing their jobs is greater than the threat of inflation for the time being. And so they are on a path to cut in September. They could change their mind, but right now, that's a pretty open suggestion that that's what they're going to do. It'd be pretty hard to walk that back. Their view is apparently that it is going to be a rough time for the labor market, with hiring really slowing down, but tariff inflation only slowly going into the economy.
Mike, we've had a lot overshadowing the Fed as we headed into the Jackson Hole Symposium. And that, of course, has been the saga of Lisa Cook and the pressure from the president himself on her to resign. And today he escalated that by threatening to fire her if she didn't leave voluntarily. Have we heard from her today or from the Fed on this? And let me also ask, Mike, what sort of signal did Jerome Powell send about Fed independence during his remarks?
Well, I can tell you Lisa Cook is here. She arrived this morning and she attended the first opening session. She got a round of applause when she walked in. Then the question becomes, what happens next in her case? That has been a distraction for the Fed, but it now could rise above that and become more of a problem if indeed the president does follow through with his threat to try to fire her, because that would trigger a legal battle between the Fed and the administration. And we're not sure how all that would play out, and we're not sure how the Fed would react. I know that Donald Trump is about ready to have reporters into the Oval Office, and he always makes remarks, so I'm sure he'll be asked about that. We may get some more guidance on what he's thinking. The Fed is not talking about it. They, as I said, consider this a distraction, and they said they don't want to get into a tit-for-tat back and forth. But at this point, we're just waiting to see what happens with that. Powell didn't send a major signal today because he didn't talk about Fed independence, also a bit of a surprise. But the other issue is what is the Fed's future? What is Jay Powell's future? So far, no word from the president.
And Mike, as you are talking, reporters have been let in at the White House. Nothing yet here when it comes to the Fed, but we can break at least one headline. President Trump saying that the World Cup draw will be at the Kennedy Center on December 5th. There, you see him there if you're joining us on Bloomberg TV, talking inside the Oval Office. Mike, just one more question for you to put a finer point on this conversation when it comes to the future of Fed independence. And I know we talk about this a lot, but it's because it's a big focus here in Washington, and that is those legal questions around whether or not the president could remove a Fed official. What do we know about what my understanding is a very high legal bar if there were to be a removal? And of course, these allegations against Lisa Cook at this point are just that. They are allegations. Looks like we might have lost Michael McKee there, but of course we thank him as always for joining and for his coverage. But to continue this conversation, and perhaps we will pick up right there, we are lucky to be joined now by Lael Brainard, the former director of the National Economic Council under the Biden administration, also former vice chair of the Federal Reserve. She's a distinguished fellow at the Georgetown Center for Financial Markets and Policies. Lael, thank you so much for being there. Can we just pick up this conversation at this point when it does come to Fed independence, and what risks you see as we watch this pressure campaign from the White House ramp up?
Absolutely. Well, I think that first, what Jay Powell said today should have been music to the president's ears. He essentially, that was a very dovish set of remarks, where he essentially said that he also viewed the risks to the labor market as the greater set of risks, saw inflation rising perhaps more slowly over time, and opened the door, I think, very clearly for a cut in December, which is exactly what the president has been pushing so hard for. So it was a dovish set of remarks, and it really went quite far in the direction of confirming there would be a cut in September. Of course, we have two more important pieces of data that couldn't go in the other direction, but he did not qualify his remarks very much. So I think the question that you're raising about the Fed's independence is very important. The president looks to be getting what he wants in terms of the path of rate cuts coming down over time, reflecting what's going on in the economy. And it's counterproductive, I think, to suggest that this should be done due to political pressure as opposed to simply following the statutory mandate of the Federal Reserve.
Director Brainard, you have also sat in that room as a member of the Federal Open Market Committee as Fed Vice Chair previously. Describe the challenge in balancing that dual mandate, especially at a moment like this when the economy is facing some strains that it really hasn't faced in more than a century, really. And we're talking about tariffs and how those are affecting the whole outlook on inflation. We heard the Fed chair talk about how the impact of those tariffs on prices might be momentary, but he did hold out the possibility that they might be more lasting. What is your view on the impact of prices, and how is the central bank balancing all that as it also looks at the labor market?
Well, I think this is a very tricky juncture for the Federal Reserve because it is responsible for keeping inflation low and keeping the economy at maximum employment. And when you see the large increases in tariffs going from 2% to 17% on average in a short period of time, that puts upward pressure on prices and downward pressure on hiring and the labor market. That's a stagflationary shock, which is the most difficult kind of shock for the Federal Reserve to handle. And they're trying to tell the public, the markets, exactly how they're weighing those risks. Up until now, we've heard a lot more about risks to inflation. Today, what we heard at Jackson Hole was the chair articulating how important it was to get out ahead of the potential recessionary risk from a weakening labor market.
We also heard Jerome Powell really highlight this idea of tighter immigration policy and how that is impacting the labor market. And I'm curious to dovetail this with the conversation we're having about tariffs. As these companies are trying to absorb perhaps the higher costs, are they also going to have to face higher labor costs?
Well, you're exactly right that not only have the tariffs created that kind of stagflationary shock, but into that mix is a much smaller inflow into the labor supply. And so it's very hard for the Federal Reserve to read the labor market right now. Unemployment hasn't budged, it hasn't gone up, but the rate of job creation has come down dramatically. And so they are trying to gauge, is that because we have so many fewer people coming into the labor market because immigration has essentially stopped, or is the labor market weakening, which will, of course, lead to an increase in the unemployment rate. And unemployment tends to rise very quickly when it does start rising, which is what the chair said in his speech today, which is why I think they are quite cautious about what's going on in the labor market.
Director Brainard, we also wanted to ask you about economic policy more broadly. And do you see an end game in the tariffs that the president has been unrolling? And what is the lasting impact in terms of U.S. global economic relations with trading partners and allies and adversaries alike?
So I think this question about is this the end game is so important for businesses who are making these hiring decisions, they're making sourcing decisions, they are making pricing decisions, and what they want more than anything, which I think we all hear, is certainty. They want to know that the tariff structure is going to essentially be completed at some point. And that will allow them to basically change their supply chains and their hiring. And hopefully, you won't see an ongoing increase in inflation. But if tariffs keep changing, keep ratcheting up, that will both make employers more cautious about hiring, and it could feed into inflation for longer. And of course, with respect to the international environment, I think trade partners are asking, to what extent can I really count on the U.S. to be a reliable international partner if the U.S. keeps changing tariff rates unilaterally based not only on trade considerations, but in some countries' cases, non-economic reasons.
To follow on that, what is the impact on the role of the dollar as the world's reserve currency? Do we see that at risk at all from this approach that the president is taking with trade and other areas?
Well, it's kind of a very important point. One of the great privileges of having the dollar be dominant is that it costs the U.S. government a lot less to borrow to service its debt than it would if we didn't have that dollar privilege. And so at a time when the national debt is projected to go up $3 to $4 trillion, the fact that we are playing fast and loose with the dollar, I think, does raise some questions about whether we might lose that advantage in terms of our borrowing costs. And that hasn't happened yet. The dollar has weakened a great deal, but when you see a tax on the independence of the Federal Reserve, it really does raise some questions about whether investors are going to want to continue to be as disproportionately invested in dollar assets, Treasury securities, as they have historically.
In the final minutes that we have with you, I wanted to pull on some of your expertise from working in the Biden White House, and I wanted to ask you about the more hands-on industrial policy that we've seen from this White House when it comes to a potential government equity stake in Intel, the so-called golden share in the Nippon Steel deal. How are you viewing what seems to be a shift in the public-private partnership? And a lot of this is because the administration is trying to bolster that domestic manufacturing. That's one of those reasons underpinning their tariff plans. How do you view this strategy by them that they're saying needs to happen in order to reach these goals that they've set out?
Well, let me just say I do think that in order to compete with China, which engages in a lot of industrial policy, that it has been important for the United States, for instance, to provide investment incentives for advanced manufacturing of chips here in America. It's great that we now have TSMC manufacturing the most advanced chips because of the Chips and Science Act. But we should compete with China based on our dynamic private sector. We should not be emulating China's state capitalism. And when I hear about these moves to take ownership stakes in some of America's most important and dynamic businesses, it really troubles me that we would be upsetting that balance. It's one thing to support the private sector. It's another thing to be moving into a kind of state capitalist model, which I do not support.
Well, in the 30 seconds we have left, let's drill down into that. Is this a proper use of CHIPS Act money, then, to do what the president is deliberating on doing, that is to take the Intel stake? Yeah,
so I think I don't know exactly the legalities of the stakes, but I just think it's bad policy. I don't think the U.S. government should be a shareholder in these companies. I think we should support private sector investment, support Intel and TSMC's and others' ability to compete with China so we can have the most advanced semiconductors here in the U.S. But moving to state capitalism is something that really troubles me.
All right, Lael Brainard, we were lucky to have you here on this important Fed Day. Former director of the National Economic Council under the Biden administration, former vice chair of the Federal Reserve, and distinguished fellow at the Georgetown Center for Financial Markets and Policy. Thank you for being here. We'll continue this conversation on Balanced Power Plus, the latest on tariffs with Canada. Stick with us. This is Bloomberg.
More news coming in from the White House. We had heard the president earlier say that the World Cup draw would be held at the Kennedy Center, but now we are hearing him talk about perhaps expanding his efforts to toughen policing by sending federal assistance, including perhaps troops, to other cities. And those include the Democratic bastions of New York and Chicago that could be coming next. And of course, we don't have very many details beyond that, but we are looking to see what else the president may have in store for us, Tyler.
Right, exactly. We'll continue to monitor this. And if you're joining us on Bloomberg Television, you would have just seen there President Trump in the Oval Office addressing reporters. We'll bring you headlines as they come in. And another headline that we did get today here has to do with tariffs, a big story that we track all the time at Bloomberg, including this one that has to do with one of our largest trading partners, and that is Canada. Canada will remove its retaliatory tariffs on a long list of U.S. products that comply with the existing North American trade deal that's in place, seeking to lower tensions with the White House. Now, this was first reported by Bloomberg News, and we're lucky to have that reporter on the byline of that story with us now. That's Brian Platt. He's a Bloomberg Canada government reporter. He joins us now from Ottawa. Brian, it's good to see you, and thanks for being here. Can you just give us some context here? Was this move expected, and which goods does it apply to?
So, yeah, to give a very brief history of this, this is a big climb down for Canada. When Donald Trump's second term started, Justin Trudeau was still Canadian Prime Minister, and Trudeau believed in retaliation. And so to go dollar for dollar, retaliation. And so when Trump first imposed the fentanyl-related tariffs on Canada, Trudeau hit back with a big list of tariffs on American goods. So that was things like Florida orange juice and Harley-Davidson motorcycles and Kentucky bourbon. Canada was really the only country in the world that hit back as hard as Trump hit Canada or hit the country when it comes to tariffs. And Carney took over as prime minister in April, but those tariffs have remained ever since. And what our sourcing tells us is that White House officials have made it clear to Mark Carney's government that if they wanted to get to any kind of trade talks on steel and autos and some of these sectoral tariffs, that initial list of tariffs that Trudeau brought in needed to go away. And so that's what Carney announced today. He said they're dropping all of those counter tariffs if the goods comply with the USMCA. And so the idea here is that that's going to pave the way for Canada and the U.S. to start talking about steel and autos.
Brian, before we get back into Canada and U.S. trade relations, we do want to break in with a little bit of news, a scoop coming in now that the Trump administration and Intel Corp are poised to announce details later today of an agreement that will give the U.S. government an equity stake in the iconic American chip maker. The exact details and timing of this announcement today, of course, are unclear, but Bloomberg has previously reported that a stake of up to 10% have been considered, and that, of course, would make the U.S. government the largest shareholder in Intel. Something we'll be watching through the rest of the program. But, Brian, we want to bring it back to the whole question of Canada and its relationship with the U.S. when it comes to trade. How significant a breakthrough is this, and what does it set up as a next step in terms of discussions with the U.S. on trade? And this includes the USMCA.
Yeah, I mean, that's like the big next step here is the USMCA talks, which there's a joint review that's due to be completed by next summer, and we'll get in. That process will start pretty soon. So that's reviewing the entire free trade deal between Canada and the U.S. and Mexico. In terms of how big of a breakthrough is this, that's the biggest question right now, because the U.S. did not give up anything here. Canada gave up its counter tariffs. The U.S. did not give anything. The idea is that this was kind of an olive branch to restart trade talks in full. Carney is going to be under a lot of pressure now to get to some kind of deal with Trump. Otherwise, Canada just keeps giving things up. I mean, this is not the first time Carney has sort of given up some concessions to Trump. Carney's going to be under a lot of domestic political pressure now to show some results in exchange for this, so we'll see where those talks go.
And Brian, can you also just give us a little bit more details here when it comes to those sector-specific tariffs and why these have perhaps, when it comes to steel, aluminum, autos, why there have been perhaps more sticking points with these negotiations compared to the tariffs that we saw implemented much earlier this year around the fentanyl and the border concerns when it comes to Canada?
Yeah, the thing to understand about this existing situation is that a lot of the trade between Canada and the U.S. right now is tariff-free because Trump has given an exemption if it's covered under the USMCA. Steel and aluminum in particular are two really big exceptions. Canada exports a ton of steel and aluminum to the U.S. They're the biggest supplier of both. Aluminum in particular, I mean, there's no other country that comes close to the amount that Canada exports to the U.S. Trump's 50% tariff is hammering the Canadian industries. Like, there's steel mills that are built all along the southern border of Canada with the U.S. who export a ton of their production normally to the U.S. and those exports are basically halted right now because of the 50% tariff that Trump has in place. So Canada's under Mark Carney's under a lot of pressure to try to get some deal done on steel and aluminum in particular. And so I think that's the biggest thing that Carney hopes to get to out of the announcement today is to somehow get some kind of deal done with Trump on steel and aluminum and get those metals shipping over the border again.
All right, Brian Platt, Bloomberg Canada government reporter, we thank you so much for all of your reporting. And to extend the conversation, we're going to bring in our signature political panel. We're joined again for Hour 2 of Balance of Power by Jeanne Zaino, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center and Democratic strategist, alongside Ashley Davis, partner at S3 Group and Republican strategist. Ashley, let me start with you, and let's pick up on tariffs, because we've gotten quite a few headlines when it comes to tariffs this week, including the U.S. and the European Union putting pen to paper, starting to get a little bit more details when it comes to these trade deals. But at this point, a lot of them are frameworks. How are you viewing the White House's strategy so far when it does come to tariffs and they really dominate the headlines?
Absolutely, and obviously it dominates some of the market conversations as well. But I think that, especially with Canada, this has been something that there's been no movement and a lot of rhetoric. And I think the fact of what Carney did, obviously there was a really, really bad relationship between Trudeau and Trump. So when Carney won, and since he's come in, there has been an effort to kind of stop the rhetoric between the two leaders. But Canada taking away these secondary tariffs, so to speak, I think that it is something that will really help the overall negotiations. Exactly as Brian said, there was no movement. Obviously, there were bigger deals with the EU, China. We still haven't figured out India. But I think the more that these frameworks are at least discussed, it takes the pressure out of the balloon, so to speak. But the frameworks are really going to what's matter at the end of the day.
All right, well, we're going to have to pause this conversation because we do want to bring our viewers and listeners some breaking news. President Trump is taking questions in the Oval Office from reporters. Let's listen in. President Trump speaking in the Oval Office, taking questions from reporters on a range of topics, including one redhead that hit the Bloomberg terminal. President Trump saying that Intel has agreed to give the U.S. a 10% equity stake, appearing to confirm a Bloomberg News scoop on this story. We are waiting for additional details. We will bring you a couple other headlines that came out from the president, notably when it comes to the war in Ukraine. President Trump reiterated that he's going to give Vladimir Putin a couple of weeks to come to the negotiating table, and then we'll make a decision on what to do. He outlined that could look like a few different things. He threatened sanctions as well as additional tariffs, but then floated that maybe the U.S. would do nothing, saying that he will say, quote, "It's your fight." We also heard him touch on another story we're following today when it comes to tariffs, saying that he will have another call with the Canadian Prime Minister Mark Carney after Canada moved today to drop retaliatory tariffs against the U.S. and what was widely seen as a peace offering, perhaps, to the White House as they try to negotiate down their tariff levies. But Michael Shepard, really the big news here on Intel, giving us some insight into his thinking here when it comes to the U.S. potentially taking this equity stake.
And Tyler, he was moving very clearly to take credit for this idea of an equity stake. And he when asked by reporters about the discussions with Intel, described his meeting with the CEO, Lip-Bu Tan, whose name he did not utter, but he did talk at length about how the two men had met, how he had gone into the meeting even with some suspicion of the CEO based on some earlier reporting that had emerged from Senate Intelligence Committee Chair Tom Cotton, but somehow the Intel chief had won him over, and that the idea for a U.S. stake of up to 10% in the company had originated with Trump.
Because this was a pretty big reversal in just the matter of days, right? We had heard from President Trump posting on Truth Social, potentially calling for his ouster, and now we have this deal emerging. What do we know about the timeline here and when we could actually get some firmer details about what we're about to see?
Well, we're waiting to see what exactly will unfold next, and that is the nitty-gritty and the details and what will appear in the paperwork where the deal is actually described. And the president is describing what he calls these restrictive covenants, and he is trying to make sure that not only the arrangement with Intel, but the one he has also set up with NVIDIA, where the company will give the U.S. government a 15% cut of any sales of AI chips to China. These are the kinds of chips that the administration had initially tried to forbid from being sold in China back in April, but reversed course under pressure from another big-name tech CEO, and that, of course, is Jensen Huang, who Trump also name-dropped during his appearance here. And overall, this is just an example, Tyler, of the kind of hands-on corporate and industrial policy that we're seeing. And it's one we heard his former vice president in a conversation with us yesterday, Mike Pence, express some objections to. He thinks that it's not a good idea for the U.S. to be taking these stakes and being so interventionist in corporate affairs. And we just heard former National Economic Council director under President Joe Biden, Lael Brainard, express those same reservations.
Right, exactly. And you could catch that conversation on the Bloomberg terminal or on Bloomberg.com. We'll continue covering all of these stories here on Bloomberg. And as we say goodbye to this edition of Balance of Power, we do want to say a very special hello to a very lucky baby out there. Our very own Kaylee Lines welcomed a healthy and beautiful baby boy earlier this year. As we end the program, we want to send a big congratulations from our Bloomberg family to Kaylee, who we miss but are so excited for as she starts this new chapter. Bloomberg Business Week Daily is up next. I'm Tyler Kendall alongside Bloomberg's Michael Shepard here in Washington. Stick with us. This is Bloomberg.